Gold is going up no matter what anyone does. I don't care what pricing scheme you have. They can't stop it. They can influence it, they can't stop it. When the whole world wants to go to gold, gold's going to go up. Now, should it be up much higher in its now? Sure. But yes, it's already decoupled, and you start to see gold decoupling from the Dow Jones, for example. The Dow Jones, out of all the stock market indices in the U.S., it's one of the smaller ones in terms of it has less than the S&P 500. It's got less stocks than the Nasdaq, but it's been the bellwether. It's the one people pay attention to, and it's the industrial one. It's where you get other goods. So when you compare gold against other physical goods, gold has decoupled from the Dow Jones. So two major signs that gold is in its bull run and it's not going to stop.
Hello everyone and welcome to another edition of CEO and Market Expert Interviews. I'm your host Lucian. Most of you know me as Triangle Investor from social media. Very happy to have Rob Kientz back to my show. He was I believe last time we spoke, it was like 8-9 months ago, something like that. So Rob, great to have you back.
Glad to be here. Thanks for inviting me back on.
Thank you very much. We have a lot of things to discuss. First, I would like to hear your general thoughts on the gold market today and what are some main things that present and future investors should keep in mind when it comes to gold investing. I know it's a big question, but please share your thoughts.
I was going to say, you may have asked me an hour-long question. We could go all day on that.
I know.
Just because this past year, gold's really broken out. I mean, I'll start with the super big 30,000 foot view. Gold has gone bonkers in the last year, and even though it's down, I think it's at 29.01 today American, and silver's at like 31.32. It's down just a bit, but over the past year, gold's really launched. What did we go from like 1,800 to 2970-ish? I mean, or I think we like on a candle chart, we hit almost 3,000. So that doesn't really count as like a close or a real market price. But we were like 2970. I mean, it got really frothy, and there are tons of catalysts for that. I mean, you just look at the world, there's a ton of economic chaos, there's geopolitical concerns, all that kind of stuff, which I'm sure, all of your viewers are familiar with. But what was really interesting in gold, well, a couple of things. I'll stay at the 30,000 foot view and then I'll drill down.
Sure.
So at the 30,000 foot view, silver's followed, but not as much. So the gold silver ratio is still skewed towards gold, much higher than what we get it out of the ground at, especially if you're talking about mining. So a lot of people are expecting silver to catch up. That silver, when you get to the American market, is suppressed in price. We know it because the commissioners admitted it. I'm not even going to go down the conspiracy theory route. We know it is because they come out and told us. They do it because they're trying to smooth out that market, and they're trying to make sure that they get enough supply that keeps the miners in business, but also keeps the industry in business, because industry needs a lot of silver. We need it for every industry. It's not just tech, it's military, it's medicine, mundane goods like cars and everyday things. We need it. So silver is a bit suppressed, but it's making money. So you've started to see gold and silver make money. And what's happened is you've started to see just this little tiny movement in the miners, just a little baby movement like the Huey and the GDX, the majors and the mids. But you haven't seen it in the juniors yet. The findings, it's not there. I'll talk to you about going to Toronto and PDAC last week. I've got some insights there we can get into in a minute. But
sure.
Now going back to gold, when you look at gold, all the inflows are basically to the US. We have it from Singapore, which is a hub for finished gold, and also there is some finishing of gold, refining, and there is also some jewelry involved in that market. It's not the biggest market, but it's a significant one from just a flow perspective on commodities and metals. I would classify Singapore as much more of a financial market, but there is commodities. Mm-hmm. And then you've seen from Swiss, and whenever it comes from the Swiss, it's refined gold. It's newly melted gold coming to the United States to fill up the coffers on COMEX, our industrial exchange. And so you have all this gold flowing into COMEX, and you had that, that event a couple of weeks ago where the LBMA started panicking and saying they have 6 to 8 week delays to fill out. And they had to slot people who wanted physical redemption off the OTC market in London. So we've seen this gold rush, and it's, back west, just like it was in the 1800s in the US when we're going out to San Francisco to dig it out of the ground. It's back west again. We've got this gold rush into COMEX. And there's all this speculation as to what's causing that. Is it US Fed Gov trying to replenish Fort Knox and the New York Fed stores of the 8,000 tons? Is it because they're trying to buy more? Is it because they're trying to put it in a sovereign wealth fund like they are Bitcoin? Or are they trying to back up the dollar? Or what's going on? And you've got that speculation. You've got the speculation that industry is going after it because of looming war concerns in Europe and the dialogue around NATO and Russia. And Martin Armstrong had a good point on a video recently where he said, whenever this happens, when things get really, we're not sure what's going to go on in Europe from like a hot war perspective, or if there's economic chaos in Europe, the gold tends to flow to the United States. So we've got some of that planned. So just tons of catalysts and factors moving gold around the world at a level we have not seen. And the new floor on gold seems to be 2,800, 2,900, which just a year, I mean, that's 1,000 more than just a year, 3 months ago. So the entire market for gold has changed. And I think silver will come and the miners will come later. We're not there yet. But the fact that gold has moved so strongly and you see a mixture of panic and a gold rush into the big industrial markets in the West has been huge. And it signifies that people are moving gold around. They're moving it through the exchange for physical mechanism. They're moving it through the ETFs. They're moving it everywhere. And so it's like this game of musical chairs, the way I describe it. You've got like 30 spots, but you've got 30 people rotating around the chairs, but you only got 10 chairs. And when the music stops, 2/3 of people are going to be out. And I think that's basically, we're in the early stages of that, people going, for the gold.
Yeah, you mentioned that you attended PDAC. I want to hear what kind of a sentiment. What did you spoke probably with a lot of investors, big guys, small family offices. I don't know, everyone, every participant on the gold market. In general, what would you say? How is the sentiment right now?
Well, I go to PDAC every year. They've been very gracious to invite me the last 3 years, especially to speak. So I get to speak, and it's wonderful. And I talked about gold and silver. I talked about gold specifically, its role as money now. And I was talking about this situation you're asking about, so it's a perfect timing for this interview. Because gold's becoming money. Of course, it's always been money. The very first article I wrote on Seeking Alpha 15 years ago, in 2010, was entitled "Gold is Money, Not an Asset," and I've been steadfast in that for 15 years. It's natural money. It's God's money. It's what everybody goes to when there's a panic in the market, and that is the sentiment. People are starting to come around to that. They're starting to see gold as money again. Not only the central banks, but investors. Now, at PDAC in particular, the last few years, because PDAC is a mining and equities conference mostly. Although you do see Sprott was there with physical gold. Last year I saw Royal Canadian Mint. I've seen Monet and jewelry. You do have the physical gold and silver product come to PDAC, but it's mostly it's prospector and developer association. So it's developing properties. It's getting the gold out of the ground. It's mostly an equity conference. Yeah. And equipment companies, drillers, all that kind of stuff. And it's huge. And it takes up 3 floors of the convention center in Toronto. And there's a ton of people. Rick Rule goes there. I spoke to Jeff Clark briefly. A lot of the big guys in the gold silver space go there. So it's mostly about the equities, but it's some about the gold. The big gold miners are making money hand over fist. I think Agnico Eagle, I believe, is now the #1 in market cap because of recent acquisitions above Newmont. Newmont is printing money. Now people are concerned about the cash costs of Newmont, the all-in sustaining costs of Newmont getting gold out of the ground, but they're still printing money, so who cares, right? At the end of the day, these big guys are making the money and they're printing cash, but their stocks haven't gone up. So why haven't they gone up? Because the generalist investors are not coming to these conferences and investing in the miners. And so what you have is in gold and silver in general, there's a rush for physical gold and silver, but you haven't spiked prices because it's mostly on the industrial end of the market. And the exchanges themselves are working to keep those in trading ranges to facilitate that. Whether that's right or wrong, is up to your viewers, but that's what they're doing. As far as the stocks go, they haven't popped yet. And when I was at PDAC, the one thing that everybody told me, CFOs, CEOs, investment, people that go talk to investors there that work for these companies, as I was walking down the aisles, I noticed we have less people here at PDAC, less exhibitors. And PDAC is generally easy to get into. It's $3,000 to $5,000 for a booth. It's cheaper than a lot of the investment conferences. A lot of people come. They do that on purpose. It's for the public. It's to educate the public and give these companies an opportunity to reach the public. And it's in a major, place in Toronto. Anyway, long story short, I'm walking down. You could drive a truck through these aisles. What they'd done is widen the aisles so you had less exhibitors, but the floor was filled. So, and everybody was telling me this. And when I went, I didn't see a ton of investors. When I spoke, there was probably 30 people sitting there watching me speak. Last year when I spoke, there was probably easily 70. So, and that could be a reflection of my content, but it could be a reflection of the fact that it wasn't busy, right? So it's not super busy. And I would say in Europe, there's probably a little bit more interest from what I can tell in the mining stocks.
Yeah.
America, the generalist investors aren't in there. You've got some hardcore investors, but you got to remember, as these older baby boomers are aging, who are the young investors that are going to come in? Well, I think it's going to be the next boom because I'm Gen X, right? 2008, we have a major crash. Gold goes on a run, 2009, 2011. My whole generation starts getting into gold and silver, and I started, talking about it on YouTube for that reason. Well, what's going to happen during the next market dislocation is the millennials and the Gen Zers are going to get in. So I do think that we'll see more people investing in equities and in gold and silver physical, but it's going to happen. The catalyst is going to be the next round of recessions. And it's going to be those younger generations that come in. So I'm not worried too much about the future of the market. It's just that right now we have a couple of things. We have the demographics of people retiring. We have general disinterest from the generalists who only go into this sector when they think it's going to boom. But at the same time, we have all these great catalysts like gold prices up and people are printing money.
Yeah.
And you've crowned a new major in gold, and even Newmont's kill. I mean, it's a great time. If you look at the balance sheets of these miners, it's a great time to put some money in if you're going to do that. If that's what you want to do, you've done your research and everything, it's a great time to do it because the valuations have not caught up with the money flows.
Yeah. With the big miners, I wanted to ask you that. How do you see their profit margins at the moment? Are they more profitable like 1 year ago? Or the costs have really gone up and they are less profitable?
Well, inflation is really affecting, especially the smaller miners. Because if you think about the smaller miners, a lot of times they're not even in development. Sometimes they're exploring, and they're just basically like, somebody give me money, so I can go pull this stuff out of the ground, or I can throw my drill holes down and figure out where this stuff is. And they just limp along because they don't have this big war chest, right? And they don't have all this money coming in. The mids and the majors do better at the beginning of a bull market because they had a war chest. They have ounces in the ground. They can afford to sell a little bit less and hold it.
Yeah.
And so even though cash costs, and by cash cost, that's the portion of all-in sustaining costs, a subsection that means getting it out of the ground. That's the equipment, the fuel, the things people typically think about when they think about mining. The all-in sustaining cost adds in stuff like marketing, general administration, that kind of stuff. The back office stuff that people don't think about.
Yeah.
But the cash costs have gone up. But the profit margins are still going up as well. So right now it's a healthy market. If you have a decent project, your all-in sustaining costs aren't more than about $2,000 because gold's at $2,900. I think for Newmont it was something like 1,400 to 1,500-ish all-in sustaining cost. Well, gold's almost double that. So your profit margins are almost 50%. So who cares? So yes, the costs are affecting. Inflation is affecting, but the big guys are able to do it. In fact, a company I covered years ago, and I'm going to throw out a quick, not referral, but just a shout out to Jerry Huang, who's CFO of Impact Silver, also runs his own investment company, Gold Silver Space. He brings me these companies. A long time he wants me to do some promotion for mine, and I always do it because every single company he's brought me is great. I love them. He brought me China Gold International probably 5 years ago. They're trading at $1. They had a ton of debt, 40% owned by the government. People did not believe in them, but they had resource in the ground. And this turnaround story from China Gold, they spent $239 million last quarter in dividends, a 7% dividend. Name me any American gold company that's ever, in recent memory, offered a 7% dividend. And not only that, Silvercorp in silver over in China is destroying it. So China's now become one of these districts which the government is actually easier to mine in than historically good ones like Mexico and Canada and the US, which are just lopping on more regulations, environmental and whatnot. China's actually easier to mine in. I've heard this now for 3 straight years from people in China, from people outside China who are thinking about getting in. So right now, China's a sweet spot. I know there's political risk there to Americans and Canadians and people in the West, but honestly, they're printing money. And China Gold International is banging it, man. They were like an $8 stock price. It was an 8-bagger from just 3 or 4 years ago. They're printing money. Yes, they have debt, but it's being paid down. And it's ridiculous how good they're doing. A new name, A-Mark, seems to have a big discovery, and it keeps growing. They may be the new Vizsla or the new Silvercrest or whatever. Haven't looked in detail, but when I hear that was the buzz. A-Mark was the buzz, right, in silver. So then, of course, you got Vizsla, you got Dolly Varden, you got those guys who are just cranking along. So the miners are actually doing pretty well. Yes, costs are up, but the prices are up enough, especially in gold, a little bit more in silver. So overall, it's still a healthy market.
Okay. Rob, central banks continued their strong interest for gold in January with reported net purchases of 18 tons, if I'm not mistaken. Usually, recently, those are the same buyers: China, Poland, Kazakhstan, Uzbekistan, pretty much the same. And my question to you is why the United States is not buying gold on the market?
Well, retail investors aren't. So if you look at the United States, here's the problem with the U.S. We used to have gold and silver in our, in fact, it's still in our Constitution. It's our money. It's always been money. And even though we have the dollar, which everybody wants to say is money, it's not. It's currency, and it's not a great currency right now anyway. Gold and silver are still money officially. And one of the things I'm involved with Citizens for Sound Money is I'm on the board, and what we do is we're in 4 to 5 states right now lobbying to, in the state level, not the federal level, in our federated system in the U.S. to get the states to back, the article and clause in the Constitution. I think it's Article 1, Section 8, whatever it is, to say, yes, it's money, and we're going to back you, and we're going to promote it. I think Utah may have just done this. We've got 7 states, I think, that gold and silver are money, and we're trying to get Florida's a big one. We're trying to do all that because we're trying to provide air cover for people to want to spend their gold and silver. Because if you just put it under the mattress, what you're doing is you're taking the best money in the world and you're sticking it somewhere where it can't be money, and you're forcing dollars down everybody's throat. And so I'm in part of that movement to make it money again for people that have it and want to spend and transact in it and protect themselves from inflation. But, only about, we've got king dollar, quote unquote, and everybody thinks the dollar's going to last forever. It's not. And I mean, if you look at what Trump is doing, Bessent are doing, and all those guys are doing, our Commerce Commissioner, Letnick, they're taking Bitcoin reserve and gold reserve and putting it into a sovereign wealth fund and a reserve to back the dollar. Well, why would they need to do that if the dollar were supreme? Because everybody's deleveraging out of the dollar. We know that. So I'll point you to a 2023 survey by World Gold Council. Basically, the central banks who were surveyed around the world said, we're going to drop the dollar below 50% of reserves. And that's going to happen in the next 2 to 3 years. It'll happen before 2030. So by 2030, everybody thinks the dollar basically is competing against all the other currencies. So, but America hasn't caught up. We've been so spoiled since 1971, actually since 1913, or I would say the 40s, for about 80 years, but specifically 50 years since 71 when Nixon took us off the gold standard. We could print money and buy a bunch of stuff, destroy other people's economies through inflation, and it didn't really come home to roost. Well, now the rest of the world's like, we're tired of that. And so, but Americans haven't caught on. So we're still using king dollar. We're still investing in all these bubble assets like stocks and real estate. We're not using gold and silver, but that's changing. So the U.S. retail right now is net selling and taking profit on gold and silver. They're pushing it back to the refiners and wholesalers, and it comes back out. So what you don't have on the retail side is people buying new American Eagles as much, or new Canadian Maple Leafs as much, or new 1 ounce rounds as much. It's all the stuff that's coming into the wholesalers. They're remelting it. They're giving a 30% discount to retail, and then they're coming out and selling it for spot plus $2, right? On silver, or spot plus 30, 40, 50 an ounce on gold. And they're making a killing doing it. And so that's where the profit is. So the wholesalers and retailers are doing okay. Mm-hmm. I mean, they're surviving off of this, but nobody's buying new gold and silver in the U.S. except for the big guys on the industrial exchange. But that will change. Because the dollar's a world reserve currency, and this will be true, whatever this is the next world reserve currency, if it's China or whoever, it will happen to them too. After about 50 years, when their currency starts to flag a little bit and people get wary of it, they'll still be spending the currency. The rest of the world will go back to gold. It's just the cycle. And that's why. So we're going to be the last to adopt gold and silver, widespread across retail investors. You see it going on like gangbusters in China. You see it going on like gangbusters in Europe. You see it going on in South America, but it's just not going on in the U.S. right now.
Yeah. Rob, in what extent would you say that the central bank buying is influencing the price, and how much is influenced by other forms of demand in dynamics? What's your take?
Well, the physical flows don't always directly influence the prices, and when I do my videos, I spend like an hour on or 40 minutes on this every week if I can do them every week. Just because it's complicated. All financial markets are complicated because it's all the intermediaries that make the money. And it's also the governments who want to kind of control those money flows. It's just in the interest of the government to do this and the financial houses to participate and help them. So essentially gold and silver as their price, spot price, is dominated by London and the US, the COMEX and the LBMA. And they kind of collude, well, they do collude. There's a London price fix and there's COMEX, and they collude through trading mechanisms and phone calls and things like that to set the market between the two. Lately, COMEX has been paying a little bit more, so the gold's flowing from London to COMEX, right? Take advantage of that. But they set the price, and it's on derivative trading. It's on the over-the-counter market of, I want this gold, and I'm going to put an unallocated claim on it, and then when I actually need it, I'm going to try to get it. But right now, it's just an unallocated claim. So you got fiat coming into London, but they don't actually have to immediately move the gold out. Think about buying a stock. You can put fiat into the stock. It doesn't mean you get the equipment from the company or the machines or even the end product like the iPhones. So that's kind of the way that market works. And in the U.S., it's a futures market. So you're betting on the future of the price. And there is legitimate hedging for physical from producers and merchants, but the vast majority, like 85, 90%, it's a casino. It's like going to Vegas and throwing money on black. You're not actually taking the gold and silver. You're throwing money on whether the roulette wheels lands on your number. So those prices don't reflect the flows as much. Now that will change because London can't deliver gold right now. That's put a crack in the Western pricing system. And if COMEX starts to do the same, which it could, because there were like 74,000 contracts in February standing for physical delivery, and if most of those don't get settled, the market's going to figure out the game, and the jig is going to be up. And so you'll see this explosion. I think the market will go to Dubai and China and all those places.
Yeah, that was actually my next question. Gold is vanishing from London at a record pace. Over 64 million ounces flowing into the US since November 2024, and the gold delivery delays have stretched from 2 days to 2 months. That's unbelievable. Some are actually speculating that the Great Britain does not have much gold holdings left. What's your take on that?
Yeah, that's you got it. You hit it nails on. The whole thing about gold and silver is they're what we call rehypothecation, or you have so many physical bars, and it's a physical asset. So physicality matters. This is not the dollar. This is not a stock, which you can just issue as much as you want and dilute everybody else out. This is a physical product. It's physical money, right? So with the central banks have been buying since the last crisis in 2008, 2009. Record amount. I think last year was the most in their history. Even back when gold and silver were money, they bought more. So you've got that. You've got the industrial demand for silver, a little bit for gold. You've got the wealthy people and the banks all buying gold and silver for the balance sheets. Why? Basel III. Basel III is now in effect most of the world, and gold is one of the high quality liquid assets, and so they want it, and it's physical, and gold talks in financial markets, period. It talks. And so you've had this rush from the big guys to go get it. And the LBMA being an unallocated market, what that essentially means is you have a bar, it could have 100 paper claims on it, that when one of those think about a bank account. This is an easier way to do it. You roll up to your bank, they only keep about maybe 5 to 10% in cash reserves, and not even all out at the branches. Sometimes it's at the central office, and they distribute it by truck as they need it. Well, let's say you walk in one day and you want $50,000 out of your account, and the bank teller's going to look at you and say, I don't have it. I've literally gone to my bank. It was a large regional bank. I'll just say it's Regions. Large regional bank here in the U.S. This was like 2 years ago before I closed my account. Went in and said, I want $5,000. And they said, we don't have it. And I said, and all of your tills in your safe, you don't have $5,000, and you're a regional bank in the U.S. It's worth hundreds of millions or billions of dollars, and you don't have $5,000 right here on like a Wednesday afternoon for me. And they said, no, we usually don't keep that much. What is that? It's fractional reserve. Because the cash goes back out, it's lent out. In fact, in our fiat system, when you create a loan, it's when a certain amount of that cash is created, and it just recirculates. And a good book by J. Edward Griffin called The Creature from Jekyll Island is a really good one to illustrate how this works. There's more than 10 times as many loans in society, debt, as there is cash, and there's a reason for that. Go read that book. So they don't have a ton of cash. Well, it's the same thing with the gold and silver market. They have all these paper claims that says, oh, I'll take all your demand, and we'll use that to set prices, even though it has nothing to do with the physical, because 90% of it is not touching, it actually grabbing and trading a bar. Yeah. So it's the same thing as your bank account. It's exact same fractional reserve system. In fact, gold was fractionally reserved before fiats were ever fractionally reserved. So this is an old game that's been going on for a long time, and it will end when people stand there and say, I need the gold and silver, which is coming, because during the next recession, boom, everybody, right? And that's going to bankrupt everywhere. And that's where you're going to see the big gold and silver price hikes. And you're seeing the early moves. All this news around London and the US and what's going on in Shanghai, all these moves is the early stages of the biggest money getting in. And if you're smart, and you're looking at that as a retail investor, you're saying, I'm doing with the big money. These central banks have not been wrong for 12 years. When people tell me gold is a relic, so why in the heck are the central banks buying it hand over fist? This is the smartest people in the world in finance. The Treasury sees all of the data for every transaction you ever do in the U.S. economy. And you're telling me they're interested in gold and you shouldn't be? No, you want to follow what the big money's doing. And so that's what we're seeing. We're seeing the big money start to move things around. And that's when the retail investor needs to pay attention to that and say, maybe I should do what the smart guys are doing. They've got all these degrees. They run all of this. They have the bazillions of dollars in these computers and these economic models. They know more than I do. Why don't I just do what they do?
Yeah, I couldn't agree more on this. Rob, we all know who is Eric Sprott. He stated last week that silver will skyrocket and believes that silver actually could reach 250, 500, maybe. But he sees stock market vulnerable, and actually he's shorting the market. So my question to you: do you believe it is a realistic scenario of a market meltdown and gold silver decoupling from that market and going to new all-time highs? Is that a realistic scenario?
Because you know what we had late last year and early this year? For the first time in recorded history. So pay attention to this. The first time in recorded history that interest rates were going up, that inflation and the DXY index were going up, and gold was going up at the same time. Gold's already decoupled from the economy. The first time in history, not 2008, 2011, not late 1970s with the 20% inflation we had, not during war, not during the tech crisis in 2000, not even during World War II. Interest rates were going up. Inflation was going up. The DXY, the dollar related to all these other currencies, was going up. And the first time in history, gold was going up at the same time. It's already decoupled. Gold is going up no matter what anyone does. I don't care what pricing scheme you have. They can't stop it. They can influence it. They can't stop it. When the whole world wants to go to gold, gold's going to go up. Now, should it be up much higher? Sure. But yes, it's already decoupled, and you start to see gold decoupling from the Dow Jones, for example. The Dow Jones, out of all the stock market indices in the U.S., it's one of the smaller ones in terms of it has less than the S&P 500. It's got less stocks than the NASDAQ, but it's been the bellwether. It's the one people pay attention to, and it's the industrial one. It's where you get other goods. So when you compare gold against other physical goods, gold has decoupled from the Dow Jones. So two major signs that gold is in its bull run and it's not going to stop. Gold decoupling from the Dow Jones is a positive one for the first time in history, for it to decouple from the DXY and to outrun the dollar and to outrun interest rates and inflation at the same time for the first time since 1913. That's a big deal. And yes, you're seeing gold decouple, and silver will follow eventually. Silver always goes second, then the mining stocks, the equities, the speculative end of the gold and silver market. But you've already seen it happen in gold. And that's why I'm saying we're in a bull market. Like, what else do you need to know? Central banks are buying it. We've had all-time firsts in gold 10 times in the past year. We've seen gold decouple already from the rest of the economy. We're seeing, for the first time in U.S. history, the U.S. doing a sovereign wealth fund with gold, and Bitcoin because of the problems with the dollar. Like, what other sign do you need? If you're out there as a retail investor going, a bunch of all-time firsts, but I think I'm going to stay on the sideline and wait till gold gets to 10,000 because that's what everybody else is going to do.
Yeah. Rob, would you agree that gold-silver ratio at 90 shows underperformance from silver?
Yeah, underperformance in terms of speculative paper bidding. If you look at what the CFTC Commissioner Ralston Benham said about 3 or 4 years ago, I think it was after Silver Squeeze. So it was, what was that, 2020, 2021, January, February, maybe 2021, something like that. You had silver get to 30, and he came out at the Boca V conference, and it's still on YouTube. You can still find it. And he said publicly, we squashed silver at $30 because it basically, in all intents and purposes, it would have wrecked the market. And he said market participants to support them. Well, who's in that market? The industrial houses, the banks, the manufacturers, and the miners, and all the speculation. So everybody was panicking because silver was going above 30. Why? All of our worldwide economies rely on silver. Almost about 75% of silver is used in product, and it's only a small portion of that's recycled. The rest goes in landfills, or it gets blown up in Tomahawk missiles and disintegrated, or whatever. Or, you have people like China buying it and stick it in a vault. just the flows of that are really astounding. And essentially, silver, especially with that gold silver ratio, silver needs to come up because it's used like that. It's not stored. And that ratio needs to go closer to 15 to 1. I actually think because silver's been lagging behind gold so long that you could see silver reach parity of gold. I wrote this article in 2010. I think people think I'm nuts. I wrote an article that says, could silver approach the price of gold? Because if you look at it, yes, silver's mined at like a 9 to 15 to 1 more ratio, depending on where the world you go. Let's say 12, 13, whatever. But most gold is still above ground. Now, there's multiple claims on it, but there's a ton of it. So you could get somebody buying gold that's existed for 2,000 years and being remelted to someone else. You can't do that with silver. So at some point, silver could go absolutely bonkers. And I think that's why a lot of the people that like to get into speculation, they like to trade currencies or trade penny stocks, they'll get into silver because they like this aspect of silver. And yeah, I think the gold-silver ratio is a mess. But a lot of it, again, is to save the industrial market. A lot of it is because we just need the silver. Now, the last 4 years, we've used more silver than we've mined. And worldwide inventories are coming down, and at some point that's going to break. But I understand why they did it. It's not the way a market's supposed to work, especially here in the US. But I understood why they did price controls. It basically was a price control for the last 15, 20 years. They did it to save the market because the world wanted to advance at a certain pace. Now, let's think about that critically for just a sec. What drove all the investment around the world since 1971? It was the dollar free from gold. So once the dollar went free and silver became this industrial asset, we mined more silver than ever because we're building stuff with all these free dollars that requires silver. So if dollar had never been taken off the gold standard, you would still see mass worldwide inventories of silver available because we wouldn't have used it all in all these goods because the dollar wouldn't have been able to, promote the production of all these goods. So really, the whole scheme in silver is because of the dollar. And if they let silver run, it's the end of the dollar. The dollar will die. It's not, people think it's when gold runs. Yeah, but gold's at 2,900. The dollar's, people still want the dollar.
Yeah.
They're deleveraging out of the dollar, but they still want it. But when silver runs and it gets to $50, it's toast for the dollar. Because at that point in time, people are, especially the speculative end and the retail end in the U.S. is going to go gobble silver like mad. And right now, in terms of available inventories in COMEX, there's only 1 ounce per person in America, slightly less, about 0.95 ounce of free silver in the COMEX, we think, if it's not been resold. And so if every person in America just wants 1 ounce of silver, it's over, it's toast. The Western market has run out. The LBMA's already, they're out. You look at their silver inventories, they've gotten hammered in the last year. If they do that in the U.S., there is no free silver in the Western market, period. And I think you could see silver reach parity with gold. People think I'm nuts, but for a short period of time it will. They're going to turn everything off. There's going to be like a bank closure, but on the silver market. They're going to close the silver bank, and people are going to panic, and then you'll see equities spike as well. I think you see silver equities go nuts.
Yeah, Rob, could we see a scenario where central banks stack silver? Maybe those central banks that are not that rich as some big central banks, that they start to stack more silver. Is that even possible?
They could, but you could see governments come out and say, no, we have to have it for industry. I think they will. And I think some have. I think banks like JP Morgan, HSBC, who have been in these commodities markets for a long time, and I can guarantee you China's done this because I've seen the flows. People are stacking silver. So,
China's central bank?
They do, but China hides it. China is not honest in their central bank reporting, and they also put it in their sovereign wealth fund, and they also put it in the hands of their state-owned enterprises. So when you look at central bank demand for gold and silver, and especially gold, you have to look at where else are they hiding it. It's not just because internationally you're supposed to report, what you've got in the central bank. Well, is China really reporting a real number? I don't think so. I think they have 28,000 tons. I wrote an article in JM Bullion on this about a year ago. I think they have 28,000 tons. I'm looking at the flows in and out and what they produce. Nothing ever comes out of that. It's like a black hole, man. Whatever they produce, they buy. Whatever comes in through Hong Kong and Singapore, they gobble it, right? They've got 28,000 tons. It's not. They only have 3,000 some on their balance sheet of the central bank. We know they've got more. Come on, we know that. We're not dumb. We see the flows. You see the physical flow, you know they got it. Yes, silver could be, but it's going to be restricted. It's going to be rationed like sugar was rationed during World War II. There's not enough. Like rubber was right. There's not enough. So governments are going to come in and set rules. And I also think, and I've said this for about 10 years, I think platinum and palladium could get a little bit of a play there. It's an industrial metal. Automotive, it's used in catalytic conversions mostly. It's also used in jewelry, but most of the industrial usage for platinum, palladium, and rhodium is in catalytic converters. Auto sales are down a little bit across the world. So that's softened the price over the last couple of 3 years for those metals. Rhodium got almost to 3,000, or was it 8,000? No, almost 8,000. Platinum got almost to 3,000. It stopped at like 29. And so they're softening demand. So you could see a little bit of demand for that metal too, because they're still precious. They're more rare than gold and silver. But I also think that when industry wants them, they're going to bid that price up. So I think gold is the longest term central monetary holding. It has just enough industrial use and just enough utility to make it have value intrinsic. And then it's also the perfect money because the amount that we mine typically has mirrored population for the last several hundred years. So it's not inflationary or deflationary. It's like the perfect mark of how much money we need in society. Much less silver, which is more industrial, and much less platinum and palladium. So I think gold is going to be your monetary, it's your clue, your canary in the coal mines to where the world economies are going. And then yes, silver, platinum, and palladium to some extent, but much less because they're so industrially used that governments are going to say, no, you got to let that go because we need it. Else, especially if you get into a wartime environment. If you start shooting off a bunch of missiles, you're going to need all the silver we produce. Because like I said, tomahawks experts think anywhere between 300 and 500 ounces for a single missile. And not only that, it's used in radar systems. If we get into, and any silver that's not used in solar panels, if we get into a recession, is immediately going to wartime environment. That's going to happen.
Yeah, agreed. Rob, what is your take on the tokenization of gold by merging physical gold with blockchain technology, and how do you see it in the future?
Yeah, so just full disclosure, I work for Kinesis. Kinesis is one of these companies that does it. Now I work more on the physical bullion side. I don't really deal with their digital product. I understand it, but it's not my role. But they do have a digitized product. They're the biggest one that have done it. They have a contract with the Indonesian government, the fifth largest government in the world. So it's been proved out on a sovereign scale where they help Indonesia run their gold and silver markets. And they also have a payment system called POS Pay, which is a point of sale payment system for their a lot of their government offices and their postal network and things like that. There's an app. And so what it is it's gold, silver backed 1-to-1, audited fully by Bureau of Veritas, which is, pretty much a standard in the industry for independent auditing. So we know it's there, and it backs up that payment system. And they also have it for consumers in about 100 countries. So it's marrying the best of both worlds, because carrying around gold and silver, it's very difficult and dangerous to do at times. So we don't use change in cash as much. We're moving more to electronic society. And if you want to buy something from Amazon, what do? Do you toss them your gold? You need an electronic component, right? So Kinesis has done that. Load was another company that's trying to do that. They've kind of moved around doing different things. There's a couple other smaller ones. And I think the tokenization of all real world assets, RWAs, is now becoming a thing. People are wanting to tokenize oil. People are wanting to tokenize land. And I think tokenization, it offers two things. One, it offers accessibility to people that don't have a lot of money but want to get in on an investment. Like you can tokenize a piece of art. Now, what does that happen on redemption? That's in title, that's other things that need to be worked out. But the other part of tokenization is it allows the economy to move at the speed of modern economy, and together with smart contracts to track monetary flows in a way that you can't do with like this old cash and SWIFT system. So I think it's going to be there. I think lots of things are going to be tokenized. Just one more example, if you look at real estate in the United States, if you look at real estate in the United States and you go to buy a house, you're paying 1% of your transaction fee in title insurance. Why would you need to have title insurance over and over and over again when all the land has been bought and resold in the United States? How many hundreds of times since last 250 years? Because all of these claims or paper claims, we had a lot of fires, we had a lot of less paperwork. What if you put this all on the blockchain and it's immutable? And so every time you go to buy a house, it's at 3 clicks. Here's my money, here's the offer, they accept it, and you don't need the title companies to do all that. So blockchain can solve a lot of friction in the economy as well. So I think it's here to stay. I think it's going to be used in the banking sector, the finance sector. I think it's going to be tokenizing all sorts of assets, not just gold and silver. And I think that's basically the way the modern economies are going to run.
Yeah. Rob, do you believe that we could see governments imposing more control over the gold that the retail average people hold? Is that a possible, not even in the war scenario, I mean, in
Yes.
every scenario?
Well, if you look at gold and silver as true money, look at financial controls, look at price controls. Yes, and I also think that they could confiscate mines. I don't know if they're outright the government's just going to take them, or they're going to put their people there to make sure they're run a certain way and that they get a discount on the production. I think that's probably the way it's going. I think the government's going to get more involved in anything that resembles money, because what are we about to hit? We're about to hit a nasty, ugly 80 and 250 year cycle. If you look at conjunctive waves, 80-year cycle since World War II. If you look at nation state cycles and dominant nation states, it's 250-year cycle. At the same time, an 80 and 250 coming together at the same time, and it all centers around the economy and money. You're going to have a nasty recession, and it's going to make 2008 look like a walk in the park, and it's going to be everywhere. And yes, there are going to be capital controls, there are going to be financial controls. There already are some. The United States doesn't want you to move out of the United States if you're a citizen. If you renounce citizenship, they come after your assets because they think that they're like, okay, capital gains on everything, you know. And if you have foreign income, they want the taxes on that. That exists already. It's going to multiply by 10. Everywhere is going to do it when finances are short, because no government wants to default, and no government wants to not be able to pay for defense, and no government wants to be able to tell other people we can't pay for your Social Security. So because of all these unfunded trillions of dollars in unfunded liabilities, not only in the United States but across the world, they're going to have to do capital controls and financial controls and all sorts of controls. So yes, it's coming to gold and silver because of the ultimate money. And Basel III and Basel IV basically guarantee that gold is going to be treated as the ultimate money. And silver will still be a hybrid between money and industrial, but they're going to control it for industrial reasons. Rost and Benham said they already did it a few years ago when silver hit 30. So they're already controlling it in a way. They're controlling it through the markets, but they'll be more explicit with it, I think, from a government perspective. And it will be the government types. It'll be the politicos that come out and say we need to control it. It's not necessarily going to be the banks or the traders.
Let's hope that you are wrong on the last one.
Yeah.
That was my last question. Rob, I want to thank you for coming to our show. Great chat, and I look forward to host you more often.
Yeah, absolutely. Thanks for inviting me back on. Happy to come on anytime you want me.